afternoon. It's McCollum on Business, Tuesday edition. I'm Stephen McCollum, and for the next 30 minutes or so, I'm going to get you updated on what's happening around the business world, including the Market Watch, which is stocks we're paying attention to, and also the national and local stories that you need to know to keep you updated on the business world out there. And look, we had sell-off galore on yesterday, Monday, the first day of December. Let's see what it is now. Let's get right into that Market Watch. And rebound is what's happening today for everything. The Russell 2K, we're going to call it a rebound, even though it's technically down 0.5 points right now. Basically even for that. The Dow Jones right now, 132 points up, 47,433 for it. The S&P 500's up 8 points to 6823. The Nasdaq's up 158 points to 23,433. Then that, as I said, the Russell 2K barely down, basically even, 0.7 points down right now, 2474 for it. And then the rebound by Bitcoin, not to the 100,000 level yet, but it's rebounded 5,700 points here today and back above 90,000, 92,055 right now for Bitcoin. So we're seeing some cryptocurrency buyback here today, which we have not seen the last couple of weeks out there, right? So we are seeing some positivity there. Stocks we're paying attention to right now. First off, Maple Bear. You know them as Instacart. This is the parent company of that, down 3.90% here today. Amazon came out and they said, separate from Instacart, right? Amazon said they're testing ultra-fast delivery of groceries. Now, they're only doing the test in Seattle and Philadelphia, but obviously if it goes well, it will move around. Whole Foods, for instance, is what Amazon owns. So these deliveries, Amazon's saying, well, they could take about 30 minutes or less, according to Amazon. And I've never used Instacart, but I know it takes a few hours to get your stuff delivered to you. Obviously, Amazon is a behemoth, putting pressure on Instacart with this information. That's why Instacart's down, or Maple Bear at least, the parent company's down 3.90%. here today. And then let's look at Boeing. We talked yesterday about Boeing right here in Mesa getting that 4.7 roughly $billion deal for Apache aircrafts. They got another deal for Seattle there for a $2.5 billion deal. Well, they're up 9.26% today. Well, more news and winning here for Boeing. $104.4 million U.S. Navy contract is now in Boeing's hands. So it's going to repair displays, I should say, and certain aircrafts that the U.S. Navy has. So Boeing, some more good news here today, but also Boeing did issue positive free cash flow guidance coming up for 2026, which if you know anything about Boeing these last couple years, free cash flow has been a problem for them. And also some big awards coming Boeing's way the last couple days, 9.28% up right now for Boeing. And then let's go back to yesterday. We looked at a company called Strategy. Well, let's look at an update on Strategy here today. Bitcoin obviously back. 92,000 is what it's trading at right now as well. Strategy getting some of those gains of the losses they had yesterday back here, right? 7.95%. Obviously, Strategy's treasury outset is Bitcoin. We went over that yesterday with you. But they're up today. And good news, right? If Bitcoin goes up, Strategy, the pressure's going to be off of them. As we told you yesterday, they were selling some of their Bitcoin to shore up $1 billion with Bitcoin crashing like it was down that 80,000 range. So Strategy at least, rebounding here today with Bitcoin up at that 92,000 here as we move on. Later on when we come back, we're going to look at Signet Jewelers. Their stock, they're the parent company of K Jewelers and Zales Jewelers, for instance. We'll look at their stock. We're going to look at United Natural Foods. They're actually a grocery distributing company out there. See what their stock's doing today. And then we're going to look at the American stock of Bayer AG. Bayer AG is a German company. Obviously Bayer, the medicine, but among other things. But we're going to look at their American stock here and look at their company as a whole and what they're reporting on out there. But first, let's get into these reporting out there in terms of national stories. And You have a few follow ups here coming your way, but there is a new Zillow report out there, and it finds that home buyers are receiving some of the steepest price discounts on record. Yes, sellers are starting to adjust their expectations here in selling their houses. So if you're buying a house, interest rates are what they are still, but maybe you get some deals out there at least to drive down that pricing. Zillow found that the typical listing in the U.S. had $25,000 in cumulative price cuts throughout October, and that matched the largest discounts that Zillow ever recorded in that specific category. A typical size of an individual price cut? Well, it's little changed in recent years at around $10,000. But it is noted that the sellers are adjusting their sales prices more frequently, with listings taking longer to move. The average price, by the way, to if a price goes down, it's about $10,000. Like, just take $10,000 off, lower it down. The share of listings with price cuts is about 26.9% of all U.S. listings, according to that report. So you're seeing a quarter, just over a quarter of listings out there going through price cuts, excuse me, trying to cut those prices to sell the houses. Zillow did note that the areas with the largest median discounts from the initial listing price, where they're located in the most expensive housing markets in the country. Right, they price those houses high in those expensive areas and just having to cut them as well. So, San Jose, for instance, just to give you an idea, well, San Jose amounted to a median $70,900 cumulative discounts out there. That's the largest of all the markets in those discounts. Other metro areas in California, well, no shocker here. They saw sizable median reductions of 61,000 over there in Los Angeles. And if you want to go up to San Francisco, 59,000 up in that area as well. San Diego down south there, $50,000 in price discounts there as well. So California taking some big hits, and New York on the East Coast also a medium cumulative price cut of $50,000 as well. So obviously the pricey markets cutting those discounts, giving price discounts pretty favorably here to get people to buy those houses as well. So, we're lucky here where you can cut the prices. I know California can cut prices as well, but there are some metro areas where home sellers they just don't have the flexibility to reduce prices. They haven't had the big increase in their home prices since they bought them as well. So these are the smallest cumulative median price discounts in October. Oklahoma City only $15,000. Louisville 15,000. St. Louis 15,000. Now Indianapolis is up to $16,000, and then Detroit was 17,100 in those Midwest markets there. So if you don't have obviously the large swings in equity going into it, less increases coming your way. But we're seeing some give here in the housing market as we go into this holiday season coming up. And got an update for you here, right? Christmas season's coming up. Good news is this isn't going to affect you until February, I believe, coming up here. But this is that update on the Real ID and the fee you will be charged if you don't have one and you're traveling by air, right? So there's a $45 fee now. We told you last week about a fee price. It wasn't 45, it's like 18. They raised it to $45 fee beginning in February, according to the Transportation Security Administration. They announced all this yesterday on Monday. You guys know that the updated ID, the Real ID, has been required since May. But so far, if you don't have it, you've been allowed to clear security with additional screening. And then they give you that little lecture, right, about not having that Real ID out there. Well, the Department of Homeland Security says 94% of passengers are already compliant and that the new fee is intended to encourage travelers to obtain the ID moving forward. The other 6% out there. So beginning February 1st, travelers 18 and older flying domestically without a Real ID and who don't have any other accepted form of ID on them, things like passports, for instance, you will pay the non-refundable fee to verify your identity through TSA's alternative Confirm.ID system that they've developed. TSA officials said that paying the fee does not guarantee verification. Travelers whose identities cannot be verified, well, you'll be turned away from air travel out there. But if you are approved for air travel, the verification will cover a 10-day travel period. So if you travel one day and you don't travel again until the 11th day, you'll have to pay another $45 to be approved at that point coming up here, right? So you can pay it online before arriving at the airport, so you can avoid that hassle out there as well. You can pay at the airport before entering the security line, is what they're going to let you do. But, they said if you pay there, well, the process may take up to 30 minutes to get through the whole thing if you go through the system itself. So you added travel time, right, for you if you don't have that real ID password. As I told you, last week or 2 weeks ago? It was 2 weeks ago now, I think, right? They had an $18, what they were saying the charge for passengers without the real ID will be. Well, they said in their announcement yesterday they raised it to that $45 because they realized the alternative identification program, it's costing more than they anticipated it to be. So a $45 fee now every time you travel within 10 days of your first one if you don't have your real ID out there. Real ID doesn't cost that much, folks. So that's what's coming down the pipeline in February, announced yesterday. And we haven't talked tariffs in a long time out there. It's kind of settled down out there, right? But now we know the UK, right? Britain, they've secured a 0% tariff rate for all UK medicines exported into the US for at least 3 years now with the Trump administration. The return that the UK gets, well, they're going to be spending a lot of money here on new medicines going into the Britain market from here in the United States. So the deal specifics are the U.S. agreed to exempt UK origin pharmaceuticals, because Trump's been pushing toward pharmaceuticals being made here in America, right? So that even includes pharmaceutical ingredients, medical technology from import taxes. No more. They're not going to have any more of those. The Trump administration said in return, the UK drug firms committed to invest more into the U.S. and then create more jobs as well here in the U.S. for their drug parts. The UK government said the 0% rate on all of its pharmaceutical exports, it was the lowest offer to any country out there. As part of the deal, the UK government said the country's National Health Service will spend around 25% more in new and effective treatments over there in the UK. It's the first major increase in such spending in over 2 decades for that country. Officials said that means UK health authorities will now be able to approve medicines that deliver significant health improvements, but they might have been previously declined purely on cost effectiveness grounds over there in the UK. So these include things like cancer treatments, therapies for rare diseases that they just deem too expensive and they don't want the medicine. Now they're going to be spending money on that stuff and importing them in there in that thing. So if you know anybody in London or anybody in the UK dealing with that type of stuff, well, it might be lightening up here coming up with this new 0% tariff deal for pharmaceuticals between the UK and the U.S. here and the Trump administration. And interesting enough, right? We've heard down. We know of several companies sued the Trump administration over the tariffs and everything. Well, Costco Wholesale Corporation's jumping into that suing mix right now. They just started it, right? They're suing the federal government to block the emergency tariffs, and they basically want to recover the funds that Costco says it was improperly required to pay on those imported goods that they brought in. So it was filed in a court of international trade, and it argues that the Trump administration used that emergency powers law, it's a story we've heard before, to impose tariffs on goods from China, Mexico, Canada, India, all those other countries out there. And they said the statute does not allow the president to create or raise tariffs. It's the same lawsuit other companies have been through. It's been to the Supreme Court and heard already. And Costco's now suing over that same thing as well. I wonder if that means Costco thinks Trump administration is going to lose this Supreme Court argument, and that's why they're jumping on it now. They actually have a specific reason on why they're suing now, other than my thoughts on that. Costco says it paid these duties throughout the year, and that they face a deadline that would prevent it from getting that money back if it's deemed illegal. The company says the government will begin finalizing, which another term would be liquidating, its import entries on or after December 15th. So once an entry is liquidated, the duty amount becomes locked, And importers will lose the ability to challenge or even recover those charges if they're deemed to be incorrect or not possible out there. So Costco says one of its entries has already been finalized, and then they have a bunch of them that are approaching the cutoff time frame, which is why they are actually filing the lawsuit right now, is to kind of keep it open that they're filing the lawsuit. They'll argue their case. Whatever happens, they'll be eligible to get that money back if it's deemed necessary as well. So Costco obviously is asking the court to declare the tariff orders invalid. They want to block Customs and Border Protection from applying the tariffs to its shipments going forward. They also want to require the government to refund all duties the company has already paid under that emergency tariff program. That so mainly they're trying to protect their ability to claw back, if you will, some of those tariffs that they've already paid and might lose out there. But Costco getting in on that fight here, and they're not the only company. Several companies are starting to do it now. It's just Costco's a big name, and that's why I chose their company here for that story out there as well. And look, if this economy's up and down, we know companies are shedding jobs, especially on the tech side of things. Well, if you're a Yankee Candle fan, well, Newell Brands, which is the parent company of Yankee Candle, they're going to close 20 Yankee Candle stores across North America coming up here in January. It's all part of their plan to streamline their retail footprint that they have currently. So it's going to be about 1% of brand sales here when these store closures happen. It's part of that company's broader optimization plan. They want to align their footprint with modern customer shopping behaviors. And then also, they want to support their multi channel growth strategy there for Yankee Candle. Yankee Candle's been around for a long time. Back in 1969, they opened their first official store. I believe it was in Massachusetts, if I remember correctly. They became a household name in the 80s and 90s out there. They were bought by a big company, Jardin Corp, in 2013 for $1.75 billion, by the way, for candles, folks. Yes, the candle company became part of Newell Brands after Newell Rubbermaid. Well, they merged with Jaden Corp back in 2016. If you don't know the name Newell, by the way, they own Rubbermaid, obviously, but Sharpie, Mister Coffee as well. So they're trying to become more agile. We've heard this story all over the place with companies laying off people right now. They want to be agile. They want to be high performing. They want to better compete in the market and be flexible out there. They want to be limber. So that's where these layoffs and in this case, store closures are happening as well. So there's other things they're doing here, besides just closing those certain stores. Yankee Candle will also reduce its global workforce by over 900 employees. That'll be about 10% of its professional and clerical employees. There will be a limited impact on manufacturing or even the supply chain's operations. Those will continue as is. Most of the professional and clerical cuts in the U.S. they'll occur coming up here in December. More layoffs across international markets continuing through next year, 2026. So this is the turnaround plan here that Newell had, and they launched back in 2023. But some Yankee Candle stores, if you're used to going to one, they're coming up in January. You want to see if it's still out there. And we finally got some, in other big company news and luxury lap news out there, right? We finally got some closure here because now officially the product group has closed the purchase of, yes, Versace. That deal is officially closed. We knew it was coming. We knew it's been in the works. It's officially closed. $1.375 billion cash deal. Can't even say it. Can't even say it when I'm breathing out. It's how ridiculous amount of money that deal is, right? So now you got Versace under the Prada's roof there now as well. This has been a looked at deal for a long time. They announced the deal earlier this year or late last year. I don't remember which. But it's been highly anticipated for both companies here as well. Now, the interesting thing is they're expected to relaunch Versace's Fortunes, because Versace's has been struggling post-pandemic. And they've struggled to get their sold out there. People aren't spending money on their stuff. People aren't liking their stuff since the pandemic out there. So maybe, this will happen. Remember, Versace was under that Capri Holdings brand over the last several years as well. Interesting enough, Prada said in a one-line statement that the acquisition has been completed because they received all regulatory clearances in this deal to get it done. Capri Holdings, where Versace was at, they're the owners of Michael Kors and Jimmy Choo, I believe, is the other one, the big name ones that they're part of as well. They're going to use the money here, the $1.375 billion. They're going to pay down some debt with that deal as well. Interesting enough, how does the Versace family feel about this? Well, Donatella Versace, well, put out an Instagram post and welcomed the deal happening as well. So there you go. And also, the deal closed on the birthday of the founder there, right? Gianni Versace, her brother there, as his birthday when that deal closed here. So maybe a new lifeline if you're a Versace fan out there coming to that brand out there. And we know AI is a big thing right now, and getting talent's a hard thing. Putting money into it's a hard thing. Small little note here: Apple's top artificial intelligence executive, yeah, he's going to retire here in 2026. He's stepping down from Apple here coming up. And then don't forget, Apple, they had a new improved AI Siri coming their way. They've postponed that until the springtime now. Their launch last year with AI was a little sketchy with their phones last year, and still not up to what they promised everybody out there as well. But head of AI is retiring here from Apple coming up. And, he'd been with Apple since 2018. His official title was Senior Vice President for Machine Learning and AI Strategy. Boy, did he get dressed up for that conference there on your screen right now, right? His name is John Gianandre. A lot of ins in that name, folks. I'm totally butchered that. He was going to be replaced by Amar Subramana. Comes to Apple after a brief stint with some other big companies in AI, right? AI with Microsoft, more than a decade at Google as well, coming over to Apple to run that AI department. So something to keep an eye on with AI development. Talent is an issue here with these companies, right? Then I got one last update for you here. Warner Brothers Discovery, right? Well, they've fielded their second round of bids, right? Before the holidays, we told you they got the first round of bids. Netflix was involved, Paramount was involved in it as well. Well, we get some more information here. And Warner Brothers fielded that second round of bids. Interesting enough, mostly cash offer came in from Netflix in this second round as well. And they're trying to wrap this up soon here in December here for the rights to Warner Brothers Discovery. The question is, are they going to sell the whole company to somebody like Paramount Skydance wants done? Netflix is going after specific categories of the company, so they're trying to figure out what they want to do. They want to make that decision quickly here this year. Over the holiday weekend there for Thanksgiving, bankers for Paramount Skydance Corp, Condesk, and Netflix, they worked over that weekend. They wanted to improve their offers for all or part of Warner Brothers, is what they're trying to figure out. Bidding war is on. Paramount has an all-cash offer. And it's basically, backed by the family of Larry Ellison, who's a founder of Oracle Corp, for that Paramount Skydance offer for them. It includes debt financing from Apollo Group Management. Middle East funds are also contributing to their deal right now. By the way, these offers are binding that they're putting in. So that means that the Warner Brothers Discovery Board they're in a position. They can agree to one of these deals instantly and sign off on that deal and close it. Close it quickly if it goes on. So it's not like you just put the offer out there and negotiate later as well. So, but Warner Brothers has not described these latest offers. The second round is final. There could be another bit of bids coming up here, but we know Netflix, all cash deal. We know for just portions of the company. And we know for sure now Paramount, all cash deal. And for the whole Warner Brothers Discovery company out there. So we'll keep up on that because it looks like Warner Brothers, it's fundamentally changing, whether it'll be the whole sale of it or pieces being broke off and others continuing. But we're about to see another major media company go through some serious changes coming up here. When we come back here at McCollum on Business, we keep it rolling here on this Tuesday. Couple local stories for you, market update. We'll wrap up strong here. McCollum on Business. Come on back, folks. And we're back here, McCollum on Business, Tuesday edition. I'm Stephen McCollum, and I appreciate you joining me here today, whether it be live or on demand, either at Robat TV or on, well, our production page out there for our company that does the production that we produce here at Robat TV. Free YouTube page on demand. Share us with your friends, would you? Out there as well. And as soon as we're done here, it goes up on demand as well, live at 11 o'clock. On demand after that for McCollum on Business, the main event. The legend, local legend, Bruce Cooper joins us on Tuesday. He was in today. We talked, of course, Suns, ASU, U of A, and other ASU things. And then, of course, Cardinals football as well with Bruce Cooper. That is up on demand, Robat TV, and on YouTube right now as well. Free podcast system. Just search at TME Sports Show on your favorite podcast system, and that'll pop right up for you as well. Of course, on the free YouTube page as well. You saw during that break there, you saw the pit stop ad there on a hiatus until racing starts again here coming up in end of January, beginning of February. Big story we're watching right now. Well, the lawsuit against NASCAR with a couple of those teams in court. The second day of court today. Follow me at the Pit Stop Talk as we'll update you on those court proceedings as people report out of that as well. And of course, we might do some emergency podcasting here and shows on that here as well. Of course, on demand, Robat TV, on demand on the YouTube page as well. At the Pit Stop Talk is where you can find the free podcast version of that show as well. If you'd rather listen to it, just search at the Pit Stop Talk. And of course, follow me on X and the social medias at the Pit Stop Talk as well, is where you can find the Pit Stop show out there. Then you got the Real Matrix. New episodes. 9 episodes are up right now. New episode coming here this Wednesday at noon is when the new episodes come out. Took a hiatus last week. The Real Matrix, the Angry Patriots, gets you updated on what's happening around the world and what is happening out there and opening your eyes out there. If you like that programming, check out the Real Matrix with the Angry Patriot there. Of course, free YouTube page. It has a free podcast system as well. Just search the Real Matrix on any of your favorite podcast systems. It pops right up. Then, of course, has its own channel here at Robat TV as well for you out there. New episode this Wednesday. With all that being said, let's wrap up here with a couple local stories and one more look at the Market Watch. Markets rebounding today after yesterday's first day of December and having issues out there. The Dow Jones right now up 219 points, S&P 500 up 22, Nasdaq's up 159 points right now, and then the Russell 2K, that small cap index, is up 2 points. It's basically been even all day, that Russell 2K. Bitcoin coming back down a little bit here. Was it 92,000? 92.5 earlier in the show. Well, down to 191.9 right now. Nothing to worry about. Above 90,000 right now, as we've got a 5,700 point gain here for Bitcoin today. Stocks we're paying attention to right now, Signet Jewelers out there. This is the parent company of K Jewelers, Zales Jewelers as well. Well, it's down 5.66% right now. Disappointing fourth quarter guidance for this company. Signet sees revenues between $2.24 and $2.37 billion in the holiday quarter is what we're looking at here. So they expected $2.38 billion. The expectation level was. So they brought their guidance down. And we've seen holiday sales take off here so far this holiday season. And they still move their guidance down here for them. Third quarter revenue for them did top expectation. The company did raise their full 2026 guidance. But again, this holiday quarter, which is huge for retailers, they moved their guidance down for this holiday quarter. And that's why they're down 5.66% here today. Next up, the grocery distributor called United Natural Foods out there. They're up 3.81% right now. They beat earnings is the reason why, to sum it up for you as well. They had 56 cents per share is what they got. 40 cents was the estimate per share is what was out there for the estimate. So blew that number out of the water for them. The revenues did fall short in their reporting, but they actually reaffirmed their full year guidance, which kind of upsets that revenue falling short. So the grocery distributor, United Natural Foods, up 3.81% based off of that news. And then we're going to look at the American, stock here of a German company. Bayer AG is what we're going to look at right now. 11.92% up here today as well. Bayer, obviously the drug, Bayer, drugs out there and everything. They do a bunch of stuff. They're a seed and crop protection company as well. They do a lot of stuff. It's a big conglomerate there in Germany. Well, it's up this 11.97%. Owner of Roundup, for instance. This is the issue, that they're dealing with or in companies in that side. They're up today big because President Trump's administration urged the Supreme Court yesterday to rule on Bayer's attempt to limit thousands of lawsuits claiming its Roundup weed killer causes cancer. And that was a report from Reuters out there. So President Trump weighing in and asking the Supreme Court to rule. Didn't say, I don't think he said which way to rule or favored it. He just said rule on limiting these lawsuits or not. Obviously, if these lawsuits can get limited, that's going to help Bayer overall in terms of their stock and, limit their exposure to these Roundup cancer lawsuits out there. And so good news for Bayer that the president chimed in. We'll have to see what the Supreme Court says if they do anything. That'll obviously affect it out there as well. But 11.97% up here for Bayer here today. Couple local stories here before we wrap up this McCollum on Business on a Tuesday. And let's go to the old stage old thing, right? A state contracted accounting firm. They did an audit out there, and specifically, they said that State Farm Stadium, and the entity that owns it out there in Glendale where the Cardinals play. Well, they said this audit here said that these entities haven't made sure that they receive the correct amount of concessions money and event fees. They're just willy-nilly accepting things, even if they're short, right? According to this. So the entity that owns the stadium is the Arizona Sports and Tourism Authority, owns it. Obviously, the Fiesta Bowl, Cardinals play there. Other events happen out there at that stadium. So this audit basically is recommending the authority double check if 5 years worth of concession revenue received is the amount the authority was actually owed. Don't they check this during the years and everything? Who's being willy-nilly about this? Auditors also found that the authority did not follow some conflict of interest laws. Things like, banning board members and staff from having certain financial stakes in companies that are there, and also disclosing all board member interests in public records. That's not a good sign from that side of things. The authority has agreed to make changes recommended in the audit, and what we've learned here, from what I can gather, the entity that owns these stadiums is just willy-nilly doing stuff, checking things, saving money by short paying, and there's some conflict of interest stuff out there. This is a taxpayer building here that needs to happen, and they're cheating the system is kind of something to look at here. So they say they're going to abide by that. We'll have to see if there's a follow up here on State Farm Stadium out there. And there's a company out in Mesa as we wrap up here today, and this is a small company getting bigger and making good. I like these types of stories here. We kind of highlight them as they come up. But Ivida is the company name. It's based out of Mesa. They're a global provider of AI video analytics and smart infrastructure technologies. So these companies, anything around AI right now is exploding, as we know, right? And they basically announced that the company has received formal notification from NASDAQ confirming that they have full compliance with the minimum $2.5 million stockholders' equity requirement as of November 25th. Basically, it means they're going to be listed on the NASDAQ coming up as well. Over the past year, Avida has accelerated their global expansion. Yeah, Mesa Company, folks, they've been dealing with Asia, Europe, Middle East as well. And then also, of course, gaining their traction and growing here in the U.S. market. So it's a balanced growth that they've been going through, and they've been surviving in this AI world dominated by some heavyweights out there as well. So not only that, they are increasing their confidence across government and enterprise partners. So they're dabbling into all sides of things. And look, got their certification for NASDAQ. I'm going to call them a small Mesa company. I tried to look up their revenues, but obviously, being private right now, could not find that to see what they are. But man, they're growing now. Gonna make it big time here on the Nasdaq coming up, folks. Hey, I appreciate you joining me here for this Tuesday edition of McCollum on Business. We'll keep it rolling tomorrow, Wednesday. Come and join me, would you? Live at 11 o'clock. At least check us out. Like, subscribe, the YouTube page, and the free podcast systems for the shows. No podcast system for this show. It's just on the YouTube page and here at Robot TV. We appreciate you guys very much. We'll see you tomorrow, everyone. Have a great Tuesday night.